Hi there, this is Teresa Tims, president of TDR Mortgage in fabulous Upland, California, and today I'd like to share with you some information on the real estate and mortgage market in Southern California. Well, I'd like to start with the state of the rates. Rates are at an all-time low, and you can find a FHA or VA rate in the range of 3.5 to 3.75. Conventional 30-year fixed 3.5 to 3.7, and 15-year loans are coming in at a low 2.99 without any points. Guidelines are not easing up. It's becoming harder and harder to qualify as lenders and banks become more scrutinous of a file and its ability to be resold on the secondary market. So they're checking and double checking and triple checking to make sure that all the T's are crossed and the I's are dotted. The good news is that rates are trended downward and they're expected to remain low through 2013. One of the things I wanted to share with you today is I have a large base of investors that I network with, and I used to be able to help them with a lot of their home loans. Investor loans have become trickier and trickier, so I'd like to share with you my tips for investor long-term financing. All right, well, like I've said before, you really need to show income in order to qualify. There are no magic stated products that used to exist. Now, if you have 2 to 3 properties, I can usually do loans for investors as long as they show a lot of income. Otherwise, what you need to do if you're an investor is take a look at community banks. Community banks have the ability to work with, I would say, the guideline, but a little bit outside the guideline. And sometimes they can work with more asset-based lending. That's where if you have a large amount of money in the bank, they may apply the guidelines a little looser. Also, portfolio lenders. Portfolio lenders are lenders that are going to service their portfolio and they're not going to be reselling it on the secondary market. When that occurs, they can be much more lenient with the guidelines. Now, everyone has a set of guidelines that they're going to apply, but when it comes to portfolio lenders, they can stretch those further than what a normal lender, a traditional bank, credit union, direct lender, mortgage broker would do. An example of a portfolio lender is U.S. Bank. We broker to them, and they are really, really good with jumbo product. But everything has a trade-off. With a portfolio lender, they're really going to scrutinize that asset, right? So that's your appraisal. So they're not gonna go with the highest comp. They're going to take the middle to the lower end of the comp spectrum. Let's see. Another tip that I have is that investors who show income or have a C Corp. So if you have a C Corp, that doesn't pass through your 1040s like an S Corp or an LLC does. So those are just some tips that I have to offer on how to purchase a home or how to refinance a home if you're an investor. Now I want you to stay tuned. My next market update is going to have some more information on the HARP 2.0. Now I had given an update on this probably about a month ago when the product was first coming out, and they had talked about how it was going to be an unlimited loan to value. So you could be as upside down as you want in your mortgage and still qualify. The reality is that that's not quite happening. So I'll share some more information with you later this week or early next week. Until then, have a fabulous day. And if you're looking to buy or sell, rates are great, prices are low, please think of me, Teresa Tims, the SoCal Loan Pro. And call me at 909-920-3500.